Hey, good morning, good morning, my neighbors. Welcome to another episode of BYTTT. Before you take the trade, if you haven't hit the like, subscribe, or the bell button, go ahead and do so right now. Oh, kind of picked the wrong one. We got a lot that we're going to cover. I'm going to make this relatively quick. I got a couple personal errands to run, but I did not want to leave you without a dope step to beat to, all that good stuff. There's a couple things that I really want to cover, like what's going on with FOMC that's coming up. A couple of looks at some of the things that I talked about as far as different alerts, and then also what's the projection and what the market can do. Again, what I try to do 90% of the time, it doesn't matter if you're right or wrong, is just what can you anticipate, and if it follows suit, then those are your opportunities. If it doesn't, don't force anything and just keep it moving. A little bit of a recap. Kind of ended yesterday's video. Went from like all that chaos on the. I'm gonna explain that. Actually, I should use that as an example on how open and ranges work. Actually, that's what we'll cover too. So we're gonna talk about projection. We're gonna talk about quad witching. We're gonna talk about what can happen, how you can run into a brick wall, and sometimes you have to look at the forest and not the trees. Without going too much into great detail, had my account, was doing well, got to my goal for the day. Struggled towards the beginning of the morning, but you'll see exactly why I struggled at the beginning of the morning. I don't know if y'all can hear my son. He's like knocked out behind me. And after that, I went ahead and got my reset in, and then I was able to get that thing funded towards the end of the day because we finally started a trend, but we was trending more downwards then and kind of run into a brick wall on that upward side. So I'm gonna explain all that out as well. And yeah, hope you enjoy the show. Don't forget to hit the like, subscribe, the bell button. One-on-ones are down below. It's in the description. So I'll look forward to working with you. Ends June 30th. All right, so here's NQ, right? And here's the funny thing about it is that yes, I we all know, I know, you know that we're inside of this order block. And depending on how you like to do your order blocks, we could go with jambalaya rice order block. We could go with two candle, downward pivots, dojis. Like all of them are just general areas of point of contest, interest, and where you know if you're coming from a bullish state going into this area, there's probably going to be some sense of bears in those areas that can easily, give you a little bit of a hard time. And and you gotta remember, bears don't only exist because they're sitting waiting. Oh my God, they're just coming out of nowhere. They keep selling it here. It could be your own people. Like you're probably bullish. You've probably been in a position for about a year or a day or a week or matter. This does not matter. As we get to these key levels, that's why it's important for you to mark them. It could be people that was part of your army getting into that resistance, and they're literally getting hit by that said brick wall. So I'm gonna go ahead and mark off some order blocks, supply zones, and demands, supply zones and resistance areas, so that we could kind of see that it's almost like the psychology of what's going on in the market, and hopefully that can give you some clarity as you go into it. So the first one I want to kind of point out is in this area. If we look deep into it, you'll notice that this area here is basically like it's a struggle, right? It is a complete struggle. I like to call this the order block, right? And you can see the so day one we get there, looks real strong. I felt a little bullish because I felt like we was going to go ahead and attempt to take out the previous day high, right? And if we look at that previous day high, we never got even close to it. So there could be some sellers that's in that position and they're putting their stop loss maybe somewhere around here. So let's get up there. somewhere around here. Maybe at the wicks of the previous candles, maybe even up here. But again, we're in futures, so this is, yeah, we're not talking about 706 stop loss or anything like that. It's just ideology looking. They probably sit on the sidelines and they're like, okay, I'm gonna readjust at these places accordingly. So when you're going into the market, it's very important that you mark these off. That's one. Another thing is we were in a downtrend, right? And that downtrend was built off of these two pivots here, right? And as we broke through that level, and then we came right back. And good friend of mine, Steve, who called this the kiss goodbye. It came like down here. He was like, "Oh, I'm leaving. Hey, I'm coming back. All right, I'll see you later." And then it's gone, right? So that's what the ideology to it. Again, what I'm using, paraphrases, metaphors, or whatever the case may be, it's very important that you give yourself some type of relation to the market so that way you can understand what could be happening. And it gives you that almost like that remembrance, so that way when you see something like it, you can get that what the rules are to them. All right, so that's that one. And then the other part is that there's the deviations, and we've talked about deviations before, and this is the deviation that we're on. So look at what's happening here. So not only were we fighting, and this is the one that I was missing, right? Because I'm always cleaning my chart over and over, and I didn't go back and put this line. So we're coming through here. We broke through at what was probably the attempt of a kiss goodbye for the market to try to see if they can find some supporters. There was no supporters. Today, coming in, there was no supporters that we even made lower lows onto by breaking the previous day low, right? So there's no supporters here. So now we're starting to build this almost like maybe this is a micro downtrend that's going to go ahead and commence back to the downside, which looks very similar to this. So as you're plotting out, you're probably going to fall victim to some of these areas in itself. So let me go ahead and get rid of this and this for the time being, and I'm going to mark off this. And shout out to TradingView. I really would wish that these anchor points can be a little bit more accurate. I get it, it's kind of hard to do the math to it, but when I go to the lower time frames, it's not at my exact points that I want to break down, so that's why I'm marking it off that way. So we're going to come back and get these again, and then what we're going to be looking for is that point. And let me get rid of this low. We're going to use the, so I'm going to kind of point out these two, yeah, this downward trend line and this downward trend line, and then this one's just going to be more like a guide to kind of point it out when we get to these lower time frames. So we're going to go over to the 15-minute, squeeze the chart as much as I can so that way I can be able to get there. Hopefully I can get December, because it's such a far away time, and this is what I was explaining earlier. I did the point, and you see it does it at the beginning of the day, which makes sense, right? It has to start with the beginning of the day, but I wish mathematically it can readjust to what time frame it is in that set level. Like, look at the level that I pointed, not just the time frame. If there's any way for TradingView to make that happen. Am I at the, oh, I'm at December already. Okay, all right, cool. Right, so here's the point, and then we're going to use that second point. Oh, it's going to be really, really hard. Okay, so I'm going to probably have to do, where are you? That's current price. Okay, it's all the way over there. Right, so these 2 points is what made the downtrend. That was the deviation of the downtrend, right? So let me go ahead and grab the first point, and then we'll navigate ourselves and wiggle, wiggle, wiggle all the way down to that area. So that's that point right there, which is this green candle here. And let's get this down there. Get my point. Get there. And I know there's a way for me to use like coordinates, and I probably could get a better usage out of it, but I just want to get this as close as possible. There we go. And that point will bring us to here. And why am I being meticulous about it is because, again, the market is a very meticulous part. I'm just letting you just know this now. Have you ever drew a line, and when you drew the line, you're like, wait, what's going on? Why is this thing like going through it? And then you get out your position, and then now it's like, wait a minute, what just happened? Why it looked like it continued? It more than likely your levels, your lines, or something is not as flush. Hence the reason why I love magnets. My magnets are on, so that way I can point out those areas. So that's the first one. Let's get back to actually one probably need current price action. Okay, so that is so this is the downtrend line from back in like February, right? And this was the breakout of that area after the April rise up, right? And then we have our most recent downtrend because we, came to the order block, we came to fair value gaps, we came to these areas that the market is very interested on to see what they're going to do with that said action. And I'm going to worry about these 2 points, right? So the first one is this red one here. Technically, I could go ahead and get a deviation out of this because this is kind of doing something along the lines of that. But we got to break away here into here, kind of like that. So how I drew the line before, where I kind of took it and I was like, well, we were going from this angle to this angle. That daily is going to give us one angle, and that's going to be pointed at those 2 points. But this one right here is showing us a deviation because these actions are showing that, as people are piling in, like, oh, look at that, we're going to short the market, and they start to realize, hey, this is a good opportunity. It's rejecting the order block. Whatever your study, whatever your ideology, whatever your indicator, whatever the case may be, this is the summation of everything in its totality of the market doing its response and bringing it back down. So when we're breaking this down and we're going into that detail, now we can see that when I got my opening range of yesterday, and of course I had to replay this a couple times for me to realize what did I just do wrong, because it felt like I was running into a brick wall. Well, yeah, I was running into a brick wall. I had this downward trend line, and this downward trend line right here, this one right here is the December downward trend line. This is the one that we broke through, took off. People started taking off their profits here. They tried to hold it, couldn't, and this was the overnight session. Came down into this lower register, found some new friends, broke back out, broke the microtrend, broke the microtrend, came to this deviation of that trend. Again, this deviation is more like here, but you can see the reaction is all the same. So assuming that no one actually went ahead and adjusted, of course, remember my rule, you got to make a lower low before you can make a lower high, and this will be your lower high that made that lower low, but this action has to happen. So where did they came from? They came from here. So readjust, put that back, boom. That is why we're here. That is why we get in this reaction in the early market. Very, 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 very important that you follow suit so that we can understand what the market is doing to you. All right, so let's go ahead and get to it. So what kind of, and again, I ended yesterday's video like, hey, Monday I made my goal, I did what I had to do, just wait, be patient, and that's exactly what I did. But being patient with inaccurate information, with unsubstantiated confirmation bias, with ideologies or general stuff, your rules can run right into a brick wall, and that's exactly what it did. So I am an open range trade, open range breakout trader. I love breakouts. I also have my market dominance. It's something that I kind of create as a proprietary software to let me know what the market can and will do based on the relative volume that comes into play. But yeah, it's I love it. It does its job. So coming into here, right? So now we got our opening range breakout. The opening range breakout wasn't strong enough to break that downward trend line, and you could kind of see we would be bullish above this level, and that's exactly what I did, right? But what would continuously happen and was just generally frustrating, and I never came back up to from surface level to more of that, orbital view of the market, And of course, hindsight is always going to be 2020. It took me to take a step back to realize that. And this brick wall here was developed only by one reason: the December rejection. Here's the December rejection line right here. They wanted to short it. And they was like, we're going to short this until this thing goes into oblivion. That's exactly what they were doing, and they were using all that liquidity here. First, people will probably be like, well, it's the order block that did that. Yes, that was part of it. But if you really think about it, those that shorted in December, they probably already in the position waiting, like, this is the most that we're going to get out of the market, and this is what we're going to be doing, and we're going to go ahead and short the crap out of it, right? So we got a nice solid, and I love my 5-minute breaks. Let me go ahead and come to a 5-minute, even though it's going to change our lines a little bit, but it shouldn't be too far off because I did it off the 15-minute. You could see right here, boom, get in. Wait a minute, they already started selling, problem. Came back down, really put some pressure on the buyers here. When it came to the 50 moving average on the 5-minute, it found a base depending on what your position is and depending on your trading plan. It kind of found a new space to get back up in there, and then that 5-minute tried to break out, but it didn't break the December line. The 5-minute tried to break out, but it did not get above here. It took until here for that to happen, and now my first inclination was, oh, finally! We waited, and mind you, when I say finally, to kind of give you a little premise, we've already established our levels back over here, and now I'm waiting from this point all the way into this point. That's about an hour and 25 minutes of waiting to make money. That's the best way to kind of assess it. And mind you, the first, take a step back, the first 25 minutes, I'm already red or very, very small, tiny profits. So that's the part that gets a little frustrating as a trader in some cases. So a nice little break. It broke the December line. If I had that line drawn, maybe I would have been in with the December line. Maybe. I don't know. Possibly. But I did not have that on the screen. And then when we get to this point, you can see profit taken. They try to close it above here. Probably new buyers stepped in here, and then they got themselves smoked. And then we got another instance of this. I do a 3 strikes in your eye type of thing. So I took the third instance. It came right back 5 minutes later. And then this was frustrating to watch, but I'm like, something's got to give. I gotta let it go. I gotta realize what's going on. But again, if I came back out and looked at it from its totality, I would be like, this whole entire order block is a tough area. Yeah, we kind of penetrated here, but we created micro downtrends here, micro downtrend here, and last one, micro downtrend here. And this is the one that really took off when this one broke this level. Nice retrace, and they was like, we have no control. So I think for the most part, this is how the market builds up their positions. They load up at the order blocks, and eventually the brokers, they're going to tip their hand. They can't help it, right? Because when they start to realize the control is outside of their hands, and there is no more buyers to bring it to lower prices for new sellers to get cheaper, maybe JP Morgan Chase didn't get all their orders in. Maybe, that pension fund that's handling your 401k, they didn't get all of their orders in. But they got enough of the orders in to kind of let this drop, because they had to locate the newest buyers, because buyers probably cleared all their buy orders from here. And they're like, I'm not going to buy until we finally reset this area. They attempted. That was not enough. The momentum, the tide was too strong, and it dropped even further. All right. So that is what kind of breaks down that. And I just wanted to make sure y'all understand that, so that way when you're taking your trades, you can understand what is happening, what the market's doing, and how you can plan accordingly. All right, so let's go ahead and get into the commodities. I'm gonna go ahead and wipe this screen. Well, not wipe it. Let me just get rid of certain things. Let's get rid of you, and you, and then we're gonna get rid of the you, and you, and we're going to keep that December line there with that order block in its place as well. Um, so to kind of start off again, I'm not saying that we're going to reject. I won't be surprised that they picked up the slack, because could this be a buy order block? We are still sitting on top of this gap. I can see the bears being bold enough to be like, well, they kind of like rode this whole entire time, so maybe we could go ahead and get this all the way back down into this register and then pick it back up somewhere in the middle of July. If you don't know, Amazon is having their Prime Day, and I'm very, very big on that. Probably going to add to whatever said run up that could be coming across the board. So just keep that in mind as tech starts to move. But we can get a nice little rejection here. And if we go ahead and look at our sessions, let's look at the opening yesterday. The opening was that, right? Yeah, we gapped down, taking out the lows. And when that happened, we kind of found ourselves a nice little support. Here's our Asian. And then at 3 a.m., which is this one here, we have our boom, 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 right? We have this area here. And again, as traders, you understand, like, the purpose of this is, it's not about being right. It's about, finding these opportunities where you can anticipate that this is going to happen. Not anticipate that this is going to happen, even though there's strategies around it, but anticipate that you can make some solid profits before it starts to go against you, right? So what I'm pointing out here is, even though we got our London session, let me put that there, here, it doesn't mean that we're going to just ride on up. Do we have a micro trend to that side? Yes, we do. We got this, and they're trying to recover this area here. Do we have that December line right there? Oh, yeah. Oh, yeah. It's right there. Right? So there's a couple of questions that I have for here, because even with this micro trend, right, actually that kind of deviates a little bit, about right here, right? We broke through here at this point, and they're trying to see if they can continue to that upside. And that's going to be the very, very, very good question as we go throughout this day. Remember, FOMC minutes is today. Actually, before we get to the rest of the tickers, let me go grab my FX book. I love my FX book because it's just the first one. I understand how to read it. I've seen Forex Factory. I've seen Financial Juice. And there's so many others that gives you this information, and not taking anything away from them, but I just prefer this here. So we're going to get jobless claims in another 7 minutes. And then after I finish with the commodities, we're probably going to wrap it. But yeah, we got jobless claims here. We got FOMC Fed interest decisions. We got some bill auctions. A lot of Thursday stuff is stuffed inside. Stuff is stuffed. That's not right. A lot of news that is for Thursday is being stuffed inside of Wednesday because of Juneteenth, which is tomorrow. So as you celebrate, enjoy your days and spend some time with your family, and maybe kick your feet up, get yourself something to eat. Save me some barbecue if you do go out there. But yeah, that's probably what you're going to be doing. But before that, we're going to get complete and pure utter chaos as the market tries to dissect this information. So just be prepared for it. 2 p.m. is probably where we're going to get a little stability or direction, because that's when the press conference is going to be there. But remember, Jay Powell is the one that does a lot of the talking for the FOMC press conference. So he could say something that can really rock the market. All right. So if you're not in profits, maybe take your money off the table. If you are in profit, maybe take your money off the table. But if you are one of those individuals that you're trying to figure out what I'm going to do with it, and you don't have enough time to see if it can weather any major pullbacks, it's probably a good time to take your money off the table. All right. But if you're like really, really healthy and you have a larger time horizon, or there's shares, this FOMC is just one day. If your time horizon is like a year, 2 years on your position, this should have an impact. Maybe even 6 months shouldn't have much of an impact on your position. All right. So let's go ahead and get to the rest of the commodities. All right, we got ourselves oil. Now, oil did surprise me a little bit when we got back up here, but I still don't believe in it. I'm going to mark the sessions off today. We'll do that tomorrow. But you could kind of see what it's doing here, especially with this nice little push up here. So I'm very curious. Will this get us back up into here? Because we had a major sell off at this top area at $77. We'll see. Next one, it is gold. Gold. I don't know if y'all were on with us, but gold did do something nice for me. It didn't go as far as I wanted, but it was still solid. I was looking for it to break out of this range, and I gave up decent profits a couple of times. Not that session. I think it was right here. So had that pop, had that pop again, and then I think I stopped out somewhere around here because I was anticipating a break at the top of this range. They did come back deep into here. Yeah, it did recover. Yeah, it got kind of higher, but it didn't take that until around 1800, which is a new trading day. I was not going to go ahead and let this thing go crazy on me. So you could kind of see this was a little bit of a annoyance inside of gold. But either way, order blocks matter. Used it as resistance. Let's go ahead, or support, I should say. Let's grab that, and let's get another one. Come on, don't misbehave. There we go. That one, and that one. Why are they bouncing off there? They're bouncing off there because they know that this order block is tough. This EMA is my 800, which is tough. And right now they're trying to decipher what they want to do. So just keep an eye on this level. 3390 to 30, maybe 3390 to 3400. Yeah, just about, maybe 405. This is probably going to be the one that's going to grab a lot of people's attention. This is silver. Silver is still doing its job. Let's get rid of this and this. And this was that kind of recovery that shocked me. And like I said, silver is still pumping. Why are they not dragging gold with it? Gonna find out soon enough. British pound, nice rejection because the dollar strengthened at that December rejection, which I'm gonna show you later. Same thing. Now SPX on the other hand, this is that fair value gap I was telling y'all about, right? That is the fair value gap. I was looking for them to get deeper into it. They didn't. We got a rejection. So if you saw this as a fair value gap fill and that's all they were looking for, you probably was better off than those that played NQ and we had some targets that we was curious can we get to. So this is that. Let's get rid of these. We'll get that done tomorrow. We got less than a minute and a half for our news and jobs report to hit. So it's not the main one. Like this is the weekly one. Non-farm payrolls. I think it's going to be in the middle of next week. No, sorry, next month. So just keep that in mind. Here's Russell. Russell is trying to get up there. I would say this is what they're looking for. I don't think they can get there. I think that we are getting these solid rejections because of these downtrends, and I do feel like this is going to be one of those tougher ones. I really think that this is the downtrend. We're just breaking through it. And we got bearish divergence. Yeah, it's very interesting what a Russell is. And then last one is our dollar. We finished green. And that's what dragged us. Dragged us, you know, came in, you thought it was nice, pulled you by your hair, dragged you all through the streets, and was like, I don't know why you think this is bullish. And it was with a bare skin coat. Just disrespectful. That's what the market does. That's what the market does. All right, we got ourselves 30 seconds until the news drops. Let's go ahead and look at NQ on the 15-minute. Actually, you know what? I'm going to look at gold. I want to see what gold does with this. All right, 14 seconds. What y'all think? Maybe upside? Yeah, possibly. Possibly. All right, there it is. News in. Yeah, a little muted on gold. That would have been a little bit more impactful there. Let's see what the NQ did. Yeah, I think everybody's afraid of FOMC. Nothing's in there. Nothing is in there. Kind of reminds me of poker, like first to bet wins. All right, so I guess we're going bearish. That's the first bet. Let's see if they can break this 200. And then I'll go drag the news. Let's go see what the news said. And bring it over. Yeah. Looks like we are bullish for the dollar. That dollar should start rocketing off. Continuous jobless claims. It is more than expected, but it is less than the previous month. I don't care for building permits. Initial jobless claims is in line as expected, but less than last month. And then here is jobless claim 4-week average, which is less last month. Oh, sorry, more than last month, but is less than consensus. So what this kind of tells you is that when consensus releases their reports, to kind of give you a little bit of an insight, they release the reports, the market kind of prices it in before it gets in there, at least a day before, and they priced in that it was going to be bullish compared. There's going to be more, right? It's a little less than what they expected, but it's still bullish nonetheless. And guess what? They like, okay, well, we're just going to go ahead and start to really kind of push that dollar. And then the same thing with this one right here. Like, this is bearish for the dollar. It is less than the previous one. So this would have been more of a raise from previous value. Okay, so this one's raised from previous value. So this was bullish last month because it's higher. This is higher than the consensus. You know what I'm saying? So even though it's lower than the what they pretty much are looking for from month over month, but it is higher than the consensus. It makes me still kind of think that this is going to be bullish for the dollar to a certain degree. But we'll see how the market reacts to that. It is very complex. Sometimes I just worry about the colors so I can just know what I'm doing with it. But generally speaking, I think this is overall still kind of bullish for that dollar. And you can kind of see we're still falling here on NQ. Let's see what the dollar looks like on this 15 minutes. Nice little pop, but it was already in a sell-off position. So this could be one of those moves that they're looking to find a base. Again, they're probably not going to do a damn thing because of FOMC. Hence the reason why I did choose today to kind of run my errands and everything else. I don't think I'm going to take a trade until 2 o'clock. I may look at opening range, but will I actually take a trade is going to be up in the air. But we'll see how that goes. I just wanted to share that with y'all. By all means, don't forget to hit the like, subscribe, and the bell button. And if you don't see a trade, sit on your hands. Cash is a position. It's better safe than sorry. And I'll see y'all tomorrow. Don't forget, I also got my one-on-ones. They end June 30th. Thank you for participating, and I'll see y'all tomorrow. You have a great day. Bye-bye.